Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming into you with our weekly stock market analysis for October the 6th, 2019. The title of this week's video is Everyone Gets to Eat This Week. Overall, this week's price action was bearish until midday Thursday, rebounding from the previous session sell-off that was triggered by lackluster jobs report and manufacturing sector data that was announced earlier in the week. These reports communicated the slowdown in the U.S. manufacturing sector that will spread into other parts of the U.S. economy sooner than anticipated by most economists. Friday, the market saw a follow-through bullish day as September jobs report release provided some assurance and reassurance that despite a slowdown in hiring, the labor market still remains very, very tight, a positive for consumers and the overall economy. This was co-signed by the U.S. unemployment falling to 3.5%, which is the lowest level in a total of 50 years. All this data in aggregate sparked the bulls to step in and push prices to weekly highs in the NASDAQ. However, the S&P and the Russell both closed down this week bearish despite high volume, abnormal price range volatility, and positive momentum in a number of key names such as Apple and Facebook. Specifically, overall within the S&P, we saw a huge range of a little bit more than 13.5 points, and in the Dow, just short of 13 points. So we'll jump right in, as always, with the S&P 500. We can take a look of the price action that did take place and see what we can anticipate for the upcoming week. As discussed in last week's video, we did feel that we would see some type of sell-off coming into this week. We did not anticipate the magnitude of that sell-off, obviously given the data that came out from manufacturing reports and other macroeconomic data pushed that to a lower area that we did kind of anticipate that would be a buy opportunity. And ironically, it did work out exactly as we predicted, coming into that 200 period moving average and looking for an opportunity for the bulls to step in. And they did with very, very much strong vigor, pushing up above the point in control and just closing just beneath the value area high for the week of 295.50. This is a key area for us. Obviously, this week is a bullish signal. However, we do want to take a look at will there be follow through coming into the front side of this week. And we did see as a potential that the bears are stepping in to kind of push back on the bills, that we weren't able to cross that $295 amount and break out of value. Now, at the same time, the bulls were able to push much, much higher and did cross over into our turning period moving average as well as our 9-period moving average. But we still have a very intact trend line to the downside that has not been able to be breached. Now, we will watch coming into this upcoming week, and we do feel if we can get a number of days worth of sustained close above 295, that will be a bullish signal for us to push up higher and look to potentially retest the $300 amount, as we did look at that as a potential opportunity for a short. Now, that would be something that we would see toward the latter part of the week. Now, there is not a large amount of economic data toward the end of the week that could propel us to that much higher prices, and we're very light on earnings this upcoming week, so we don't anticipate a lot of market movement momentum that would push us higher. But if we do get a nice close above that $295 amount, that will be very key for us as an opportunity to kind of break out of this pretty consistent 3-week downturn that we've seen over the last few weeks or so. So we do want to continue to watch the S&P, however, the bulls stepped in very, very aggressively at that key level right at our 200 period moving average and crossing and closing above our point of control. With that, we'll move on to the S&P, from the S&P over to the NASDAQ, which did see us closing on a positive note. Apple is one of the largest share percentages of the NASDAQ, and it did push us much, much higher, with Apple closing approximately 6 points up just on Friday alone. Now, we do want to see a continuation coming into the front side of the week to see if we can push above this multi-week trend line downward. Now, the volume was very, very high on the NASDAQ as well, and we did close above value. So that is a very bullish signal for us that we do want to watch to see if we can continue to maintain that momentum coming into the next upcoming week. Now, if we do see some consistent closes above the 188 level and a key touch of the 190 level, that will be something that will be key for the bulls to continue to have upward momentum to push it up towards the 192 level, which is a longer term trend line going back until mid-July. So we do want to watch that as we move forward. And we did see a nice bounce off of a multi-week trend line that the bulls did take advantage of, getting close to the 200 period moving average as well. And we do want to see if the bears have an opportunity. If we do come back into range, we do feel that there will be some downside pressure to potentially retest that trend line over the next few weeks or so, which comes in roughly about $183, $184. So we'll watch that. We'll now move on to the Russell. The Russell did close down this week just short of 1.5%, large sell-off toward the front side of the week with a little recovery toward the end of the week, very similar to the S&P and the NASDAQ. However, we did not reach to the point that we anticipated back above the 20 or even closing above the 9-period moving average, which signs us that we still are very bearish on the Russell. Now, we did see a clear touch of an area that we did anticipate as communicated in last week's video and did bounce right back into range. Now, there are higher odds that we will continue to have a slow grind upward back toward the top of the range, roughly about $158, but we don't anticipate that taking place in the upcoming week. But we do see this type of pattern continuing to unfold and potentially a retouch of the $155 level, which is the point of control. Now, if we do begin to see a continuation upward, we do see a short-term short opportunity that we most likely will take. Now, we will communicate out if we do take that. This is not a trade recommendation, just an illustration of what we are doing. Roughly about the $152 level, there is a potential opportunity for a short, for a quick retest right back down to roughly about the $150 level. So we will watch that going into or the middle part of the week as a potential opportunity. If we cannot get above the high of this past week, we will continue to be very much bearish on the Russell. Now, we have seen pretty consistently over the last several months, going back into May, a nice clear oscillation upwards and downwards, coming a pivot right within value area low and value area high. Now, we do see, obviously, this last week we tested outside of range and came right back in, which the bulls did take full advantage of to try to push prices much higher. But we do see a little bit of resistance, and we do have a level marked out of 152 or so for an opportunity to come do a short retest back, potentially even coming down here towards trend line and then returning back up toward the top and retesting 158. Now, we do see that taking probably about 2 weeks for that to totally unfold, to look to retest the most recent highs over the last few weeks or so. So we do want to continue to watch that. And overall, there are still macroeconomic indicators that we will look as potential impacts. Obviously, communication coming out of the White House, the lack of an agreement in regards to the China and U.S. tariff battle, as well as Brexit. All of these things that we've been communicating over the last several weeks still do have an impact, but over the last few days or so, we have seen some opportunities where the bulls are looking to come in and purchase at a discount and looking to drive things upward. But we do feel, at least on the Russell, that we will continue in this trading range moving forward with some opportunities for a quick short-term short. So with that, we'll keep our video short for this week. As always, keep in mind that it's your money and it should be under your control. Take care.